Where are we right now in the commodity cycle? Joining me today to talk about this, mining and the economy, is Willem Middelkoop, founder of the Commodity Discovery Fund. Willem, it's a pleasure to have you back on Kitco. Welcome back.
Thank you. Great to be here.
We're going to talk about all those things I just mentioned, but first, you're based in Amsterdam. Tell us about how a European has been following the U.S. elections and what sentiment you have personally on what we've just witnessed in the last week or so.
Well, of course, it's quite bizarre to see it all unfolding. And I think we're in for a rough period. And it doesn't matter which president will be next. But the next president, he can only avoid a deep depression by printing trillions and trillions. So I think as an investor, we concentrate on that. That's part of the story. But people are very divided here in Europe as well, pro-Trump, anti-Trump. So it's a polarized world also here on social media.
Yeah, it's a polarized world in Europe as well, is what you're saying. Is it because of the rise of populism that has happened over the last decade?
Yeah, I think that's the reason for this polarization is that many people feel that they don't join in the party. You know, we have always this talk about the 1% in North America who's making lots of money. And there are many people here in Europe as well. We've seen the revolt and the riots in France, the Yellow Vest movement. Many people feel left out. And I think that's the same movement we've seen in the US. And that's why Trump has such a great following.
Right. When we've seen Brexit and, there was talk of Italy wanting to leave the euro area as well. So it's happening all over the world. This rise of protectionist policies, how does that affect the economy at large?
Well, of course, it's quite troubling that we have seen US policies against China. I think it would be better for all of us when we could start to work together. And I've been a student of China myself. I've traveled a lot to China. 2 of my books have been translated into Chinese. And the Chinese want to do business. The Chinese are not, it's not their strategy to take over the world. But they feel that they need a bigger seat at the table. And they're really fed up now with the US deciding what will happen within the NATO, what will happen with IMF.
Yeah, well, the Republican Party in the United States now has control of the Senate, and analysts have argued that it's unlikely because of that. It's unlikely that they will raise taxes in the foreseeable future. So that's one positive news for investors. I wonder why there's such an anti-socialism sentiment in the United States when a lot of the policies that they don't agree with are right there in Scandinavia, in the Netherlands, and it works fine in that part of the world.
Yeah, we're always surprised by the way the US sees France. And if you study the system now, the US economic system, the financial system, it's state capitalism. That's a form of socialism already.
Is that the system that America should be gravitating towards or away from right now?
Well, of course, state capitalism is not a normal way of capitalism, because capitalism is built around free markets. But I think we have created so much debt, and this is a worldwide phenomenon. So we can't have normal interest rates anymore. We can't have normal monetary policies anymore. And we have seen the IMF coming out with a statement last week that we need a new Bretton Woods moment. You know, the first Bretton Woods was 1944, in which the new monetary system was created. We had a cover of Time magazine calling for the Great Reset. We had the World Economic Forum calling for a Great Reset. I wrote a book on the topic that was published in 2014. It was called The Big Reset. So all insiders understand we're in the end game of this dollar system.
What's going to happen during this Great Reset? What's going to happen to the dollar? What's going to happen to the economy? What's going to happen to monetary policy, our way of life? How would everything be different, Willem?
Well, there are a few problems we need to solve. We need a debt restructuring. IMF and the United Nations have been quite clear about that. We need debt restructurings first for the poor countries, but later for the rich countries. We all have too much debt on our books. We need to find a new anchor for world's monetary system. Mark Carney, the governor of the Bank of England, he said this in a speech in Jackson Hole in the summer of last year. And I think gold might be revalued again, just like we've seen in the 1930s when we had another crisis. And part of the New Deal in the 1930s was a revaluation of gold reserves. And you might know that China, Russia, and all central banks have huge gold reserves. So once you revalue these gold reserves, the balance sheets of central banks really look a lot brighter. And if you combine that with debt restructurings, I think that will be the trick to solve many problems on the balance sheet.
I noticed you didn't use the words gold standard. Is that but what you're describing sounds like a gold standard.
Well, actually, I wrote a opinion piece for the OMVIF, that's a London-based think tank on monetary affairs, that actually we're entering a new phase in which gold is becoming more and more important without an official declaration. So there's no official gold standard, but you see gold is going higher because of market forces, and gold might go a lot higher because of central bank policies.
Okay, let's talk about the European economy. We've talked a lot about North America on our show, but you're based in Europe, so I'd like to get your sentiments on Europe. Lockdowns are happening again all over Europe, a second wave of lockdowns, France, Germany, Netherlands, where you're based. How's that going to impact the economy again? Is Europe able to withstand another round of lockdowns, Willem?
It's very tough, but I think Europe is in the same boat as the US. I just saw a survey about small and medium-sized companies in the US. 30% of those companies are afraid they won't survive this downturn. Maybe it's less severe in Europe, but many small companies, many are in trouble, and that's why. As investors, we can be quite certain that more and more stimulus will be needed, more and more money will be created to avoid a deep worldwide depression. And I think that's the positive news for investors, because we know which train we're in, we know which direction this train is heading, and more and more people want to jump onto this train.
Is the ECB ready to issue basically unlimited quantitative easing like the US Federal Reserve?
I think they need to, and that's why they rush to develop the central bank digital currency now. Christine Lagarde, president of the ECB, has been quite open about this. We need the central bank digital currency to be ready soon. I think we see the same in the US, we see the same in China. And central banks understand that the commercial banks are in trouble as well. And you can't rely on the commercial banks, the private banks, to offer enough support. Their balance sheets are stretched. So you need the balance sheet of the central banks to give direct liquidity to markets, but also to private citizens and companies.
Why do they? Let's talk about that. Why do they need to issue a central bank digital currency? They're already issuing fiat money, right? They're printing fiat money. Why do they also need to create digital currencies now?
Well, the only way to create money now is through commercial banks. So commercial banks can only create money by, increasing the debts. So selling more mortgages, selling more loans. But the private banks, the commercial banks, are stretched to the limit. And if central banks can provide money, liquidity directly to the people, they can do it without creating debts on the balance sheets of commercial banks. And I think they understand that's needed now.
Well, you've written a book about the dollar collapsing, right? And I think, this was years ago, but I think this is, it's more applicable now than ever, because when you wrote the book, we didn't have unlimited quantitative easing. Can you talk about how the dollar is going to be impacted by this global reset that you talked about?
Yeah, my first book was published in 2007. I warned for a major economic crisis within 15 years, 10 to 15 years. It all happened within 12 months when Lehman collapsed. I always advised investors to hedge their assets by using gold, because I was quite sure that central banks, the only thing they could do was bring interest rates towards zero and create more and more money. If we look at the money growth, we are entering a parabolic phase, and it's getting scary, and more people understand. I was a little early. But we've seen Warren Buffett, we've seen many billionaires, the smart money, they're all entering the gold space now. And this is a sign. I was a private investor. I was actually a client of Kitco in 2002. I bought my first silver bullion through your website in 2002. I was very early. But now this is a worldwide, hedging strategy.
Okay. And what happens to cryptocurrencies and blockchain during this global reset? What role does something like Bitcoin play in our new economy?
Yeah, I have a portfolio which I use for over 10 years now. That's 25% in real estate, 25% in cash, 25% in physical gold and silver, and 25% in equities. And of the cash, the 25% the cash, I advise people now to store a part of that in Bitcoin, and not crypto in general, just Bitcoin, because Bitcoin is the only safe digital assets. And I wrote in one of my books in 2013 that it's virtual gold, Bitcoin. I was very hesitant to invest in Bitcoin at first myself, so I missed the first few moves up, but I invested at least 5% of my net worth in Bitcoin now. So I think Bitcoin will do very well, because Bitcoin has an advantage even over physical gold, that you can store your wealth. You're not dependent on one location. So it's a very strong instrument to hedge against all the money creation.
Well, what changed your mind about Bitcoin? You said you didn't invest in the early days, but then you later got in. What changed your mind?
Because first I thought I had to choose between physical gold and Bitcoin, but that was the wrong picture. So you should ask yourself: do I have to hold cash, fiat money, or do I hold Bitcoin? And then, because Bitcoin is restricted, we can only mine 21 million Bitcoin ever. And the amount of fiat money we can print, is indefinite. So it's always safer to hold your cash in something like Bitcoin.
Okay, let's talk about the comparisons between now and 2008, because you're talking about avoiding a global depression now, and what monetary institutions or financial institutions need to do to prevent a global depression. Did you think that we were going to enter a global depression in 2008?
I was afraid. I was afraid that central banks were losing control. They almost lost control in the days after the Lehman crash. So central bankers, we know that from the books that have been published. So central bankers were very scared, and they understood there was only one way to avoid the total collapse and worldwide depression. That was printing as much money that was needed and bring down interest rates towards zero. And that's what they have been continued to do in the last few years. And now they're trapped. We can't go back. The only thing we can do is print more and more money. And now the trust of the worldwide monetary system is at stake. And that's why more and more people are fleeing and towards gold, silver, but also Bitcoin. People are starting to flee out of fiat money, and that's a very risky situation, because if only 1 or 2% of the people start to flee, that's not a major risk for the system. But if 5 or 6% of the people start to flee, you enter into hyperinflation, and we all know these periods from the future. The Weimar Republic in the 1920s in Germany. We know Venezuela. And the ever-rising stock markets we see now. We've seen ever-rising stock markets in Venezuela and Caracas because of all the money being printed.
Why would they be fleeing towards gold and Bitcoin? Wouldn't you, in a period of unlimited QE, wouldn't you want to be invested in risk assets like equities, where you're going to see just constant inflation of assets?
The smart money is fleeing to everything the government can't print. So that's gold, that's Bitcoin, that's real estate, but also listed equities. The government can't print listed equities. So if you study history, I'm a student of monetary history. And in every period of hyperinflation, stocks are going up because it's much safer to own stocks than to own cash.
Okay. What will this worldwide depression look like? Let's suppose the central banks fail. Let's suppose we don't recover. We're still in lockdowns. What would happen?
Well, I think we have to look to the 1930s, and central bankers know this as well, and they don't want the 1930s. They made some mistakes then. So they will do everything to avoid the 1930s, a deep depression worldwide. So that's why, as investors, you can be sure they will continue to print more money until worldwide hyperinflation is on the doorstep, and then they will introduce gold again into the financial system. They will they will return to some kind of a gold standard, because that's the only way to keep trust in the monetary system.